Shelter price inflation, however, has been elevated for several years now and has increased further in the last 6 months. It's now the biggest contributor to above target inflation. But high shelter cost inflation also reflects increases in rents and other housing costs, which are more related to the structural shortage of housing that I mentioned earlier. This is not something monetary policy can fix.
Bank of Canada Governor Tiff Macklem there on Canada's tight housing market. Supply shortages across the country are driving up both purchasing and rental costs, something Macklem says is now the biggest driver of inflation. Those comments came just yesterday, and this morning we got an inside look at the bank's thinking, with the central bank releasing minutes from its governing council meeting that led to its decision to hold rates steady at 5% in January. The top line takeaway from that report: there's too much uncertainty in the economy for the bank to target when rate cuts could start. Here to talk about what that means for you is former Bank of Canada Governor David Dodge and former Finance Minister John Manley. They're both now senior advisors with Bennett Jones. Hello, nice to see you both as usual. Mr. Dodge, I'll start with you. The Governing Council flagged a, quote, mixed picture of indicators as informing A, its last rate decision, but B, what I mentioned in the introduction there, the inability to really predict exactly when rate cuts could start. What do you take from that?
They're waiting for some more information, and I think that's quite correct. But quite frankly, it doesn't matter very much whether those rate cuts start in June or whether it's July or August. They are coming, and the big issue then will be in 2025, just how low will those rates go? And in our recent Bennett Jones report, we pointed out very clearly that they're not going to go back to the low rates that we saw in the pre-COVID period.
I have a couple follow-ups, and I'll bring Mr. Manley in for a second. But when you say they are coming, how are you so certain, and why?
Because the balance between demand and supply and aggregate in the economy is shifting. And that is precisely what the bank is waiting for. The precise moment when they think the shift has been big enough is going to be a judgment call, but it's coming.
They're a little, according to that report that came out today, Mr. Manley, worry of overshooting or undershooting because of the impact either could have basically on the overall economy. How worried should they be, in your view?
Well, I think one of the things that Canadians are beginning to realize, once again, we've realized it in the past, is that monetary policy is a very blunt instrument. And, you know, some have compared it to the shower in an old hotel. You know, you go into the shower, you turn it on, it's not hot enough, you a little more and a little more, and all of a sudden it's blasting you and you're burning. You turn the tap the other way, and then you're freezing again. You know, monetary policy is it's not that perfectly refined. I mean, it was very good in David's era for sure, but when you get these very volatile periods like we've been having, you know, with the impact of COVID, the impact it had on the supply side, very low interest rates that were fueling demand, and you had this sudden ratcheting up of inflation, it's just not that finely tuned that you can just, you know, approximate exactly what everything is going to look like.
Mr. Dodge, what are your thoughts on that balancing act, specifically, you know, especially, I should say, in the context of this year?
Yeah, look, there is uncertainty out there as to exactly how this rebalancing in the economy, how fast it's going to take place. We've actually been surprised that it has taken longer to get the rebalancing. We've been surprised that the bite of monetary policy has not come as soon as expected, either in Canada or in the United States. But we can now see it's coming, and you cannot You cannot fine tune to the month or to the quarter or even maybe even to the precise half year when you're going to actually take action.
To the disappointment of all the millions of Canadians watching whose mortgage comes up in the next 2 years. Mr. Manley, last question to you, and it's on the point Mr. Macklem was making around the limited impact of monetary policy, in his view, on the housing market. You've been in government. Governments on all levels are right now consumed with trying to address that affordability issue. Their supply side policies, though, will take a long time to take effect. How much would that concern you?
Well, I think it puts a lot of pressure on government to use the other policy tools at its disposal to address the housing shortage. I mean, I think it's very good that that Governor Macklem came out and clarified this for people. This notion that, oh my gosh, it's interest rates that are too high that's making housing expensive is completely backwards. It's pretty simple. I mean, we have two stocks of housing in Canada. We have existing used housing and we have new housing. Turning over existing housing takes a long time. People either die or they move away or they move into, seniors' residences in order to vacate space. New housing is also surprisingly difficult to move because we have regulations and we have shortages of workers, and it takes time to get approvals to build things. So if the rate of household formation, which is in part driven by growth in the population, much of which has been from immigration, exceeds the rate at which new houses get built or existing houses are vacated, prices are going to go up. And I think that's what we've been seeing, and Governor Macklem said it's been going on for a number of years now, that the supply side is not meeting the demand side. And you don't have to be a PhD economist like Governor Dodge to realize that's going to make things more expensive. And nothing monetary policy can do about that.
Okay, I'll leave it on that note. Thanks so much to both of you. Appreciate the insights and analysis this evening. Former Bank of Canada Governor David Dodge and former Finance Minister John Manley, both senior advisors at Bennett Jones now. Thank you.